June 28, 2015. Cape Canaveral, Florida. A Falcon 9 rocket lifts off the launch pad at 2:21 in the afternoon. 2 minutes and 19 seconds later, it explodes. The payload, a Dragon capsule carrying supplies to the International Space Station, is destroyed completely. It is SpaceX's most public failure to date. Elon Musk watches from mission control. He does not panic. He does not apologize. He schedules another launch. 6 months later, on December 21, 2015, a Falcon 9 launches again. This time it delivers its payload to orbit. And then, for the first time in the history of spaceflight, the rocket's first stage turns around, re-enters the atmosphere, and lands itself upright on a concrete pad at Cape Canaveral. The crowd in mission control loses its mind. And somewhere on Wall Street, the phones start ringing. SpaceX has just demonstrated something no aerospace company had ever done before. It had made a rocket reusable, and the financial implications were staggering. A reusable rocket meant dramatically lower launch costs. Lower launch costs meant more launches. More launches meant a commercial space market that had never existed before was suddenly possible. The valuation estimates begin immediately. 10 billion, 30 billion, 50 billion. But there is a problem. SpaceX is a private company. It does not trade on any stock exchange. It files no public financial disclosures. It holds no earnings calls. It answers to no public shareholders. Its books are closed. Its board is controlled. And the one man who decides whether any of that ever changes has shown, consistently and deliberately, that he has no intention of changing it. His name is Elon Musk. And this is the story of the most valuable company in American history that you are not allowed to own. To understand why SpaceX has never gone public, you have to understand what going public actually costs. In 1999, Musk's first company, Zip2, is acquired. He makes $22 million. He pours almost all of it into his next company, X.com, which becomes PayPal. When eBay acquires PayPal in 2002, Musk walks away with $180 million. He is 31 years old. He has more money than he will ever need. And he has already decided what he is going to do with it. He is going to go to Mars. Not metaphorically, literally. He believes, with genuine conviction, that humanity must become a multi-planetary species to survive. And he believes that no existing aerospace company, not Boeing, not Lockheed, not NASA, is moving fast enough to make that happen. So he starts SpaceX in May 2002 with $100 million of his own money, a rented warehouse in El Segundo, California, and a small team of engineers he recruits personally. The early years are nearly fatal. The first 3 Falcon 1 launches fail. Each one is not just a technical setback. It is a public humiliation in an industry where failure is never forgotten. Engineers quit. Investors grow nervous. The press writes SpaceX off entirely. By 2008, Musk is running out of money simultaneously at SpaceX and Tesla. He later says he was borrowing money from friends to cover basic expenses. In a 60 Minutes interview years later, he describes those months as the worst of his life. He genuinely believed both companies might die. The 4th Falcon 1 launch, on September 28, 2008, succeeds. The entire SpaceX team watches from a small room in Kwajalein Atoll in the middle of the Pacific Ocean. When the engine cuts off and the rocket reaches orbit, grown engineers weep. Musk walks out in front of the crowd and can barely speak. Months later, NASA awards SpaceX a $1.6 billion contract to resupply the International Space Station. The company survives. But something else happens in those dark years that shapes everything that comes after. Musk watches what public markets do to companies he cares about. He watches short sellers attack Tesla daily. He watches quarterly earnings pressure force executives to sacrifice long-term strategy for short-term numbers. He watches boards get captured by investors whose time horizon is measured in months, not decades. The public market, he concludes, is not a tool. It is a trap. And he makes a decision that will define SpaceX for the next 2 decades. SpaceX will never go public. Not until Mars is colonized. Maybe not even then. This is not a casual preference. It is a structural philosophy. Musk tells interviewers, employees, and investors the same thing repeatedly over 20 years. The stock market is incompatible with what SpaceX is trying to do. Public shareholders want profits next quarter. SpaceX wants to build a city on another planet. These two goals are not reconcilable. But there is a second reason, one that gets discussed less. Control. In 2018, Elon Musk tweets that he is considering taking Tesla private at $420 per share. Funding secured, he writes. The tweet sends Tesla's stock up 6% before trading is halted. The SEC launches an investigation. Musk is charged with securities fraud. He settles for $20 million and agrees to have his tweets pre-approved by Tesla's legal team, a requirement he later fights publicly and bitterly. The episode crystallizes something Musk has believed for years. Public markets are a constraint, a leash, a mechanism by which people who have no stake in your mission can determine whether your mission survives. At SpaceX, there is no leash. SpaceX's shareholder structure gives Musk overwhelming voting control. Early investors, Google, Fidelity, sovereign wealth funds from the Middle East and Asia, have put billions into the company. But they have purchased economic interest, not control. The decisions belong to Musk. And the decisions he makes are ones no public company CEO could survive. SpaceX has exploded rockets deliberately. It has destroyed prototype after prototype of its Starship vehicle in controlled tests that would have triggered catastrophic stock sell-offs at any publicly listed aerospace company. It has pursued technologies, fully reusable super heavy launch vehicles, global satellite internet, point-to-point Earth transport, that have no near-term revenue justification and would be impossible to defend on a quarterly earnings call. This is not recklessness. It is methodology. Musk calls it failing fast. The results speak for themselves. By 2024, SpaceX is launching more mass to orbit than every other nation and company on Earth combined. Its Falcon 9 rocket has completed more than 300 successful missions. Its Starlink satellite internet network has more than 6 million subscribers across 60 countries. And the valuation has reached $350 billion. To put that in context, Boeing, the company that built American commercial aviation for nearly a century, is worth approximately 1/10 of that. Now here is where it gets interesting. SpaceX also operates Starlink, its global satellite internet business. By 2023, Starlink is generating over $1 billion in annual revenue. It is profitable. It is growing. And for a brief moment, it appears that Musk might allow this piece of SpaceX to go public. He says as much. Starlink might be listed, he tells interviewers, once its revenue is predictable enough for public markets to value it properly. The financial press treats this as a breakthrough, a crack in the wall. But the IPO never comes. The window opens and closes without a single share being offered to the public. Starlink's revenue continues to grow. Its valuation inside SpaceX continues to climb. And ordinary investors continue to watch from the outside. The crack was not a door. It was a signal. A reminder that the decision of whether you are allowed to participate belongs entirely to one man. And that man has never shown any urgency to let you in. SpaceX does not need to go public to raise money. This is the critical fact that most coverage misses entirely. The traditional reason companies went public was capital. Public markets gave companies the ability to raise billions from millions of small investors simultaneously. Transparency and regulatory compliance in exchange for access to capital at scale. That was the deal. SpaceX has broken that deal entirely. The company has raised billions from sovereign wealth funds, from technology giants, from private equity firms, from foreign government investment vehicles. It has raised money at valuations that would have required a public offering 20 years ago. It has done all of this without filing a single public financial disclosure, without holding a single earnings call, without opening its books to a single ordinary investor. But here is the detail that most people never hear. There is already a market for SpaceX shares. It just does not include you. In the secondary private market, a system of transactions between wealthy individuals, family offices, and institutional funds operating outside public exchanges, SpaceX equity trades regularly. Accredited investors with minimum investments often starting at $100,000 can purchase stakes through private brokers. The price is negotiated. The terms are private. The access requires connections that most people do not have and money that most people do not hold. So SpaceX shares exist. They change hands. Wealth is created and transferred. You simply are not invited to that room. And SpaceX is not alone. It is the most prominent example of a new class of permanent private companies, large enough, profitable enough, and well-connected enough to access institutional capital indefinitely without ever needing the public markets. Between 1996 and 2016, the number of publicly listed companies in the United States fell from more than 8,000 to fewer than 4,000. The companies that remained private got larger. The wealth they created stayed private. And the ordinary investor found that the most consequential companies being built in their lifetime were simply not available to them. At any price. Not because those investors lacked money, but because the companies did not need them. There is one more story inside the SpaceX IPO question that almost never gets told. SpaceX has received more than $15 billion in government contracts since its founding. NASA launch contracts, Department of Defense satellite launches, national security payload missions, Starlink terminals for the Ukrainian military, astronaut transport missions to the International Space Station. These are public funds, taxpayer money, directed to a private company whose financial operations are entirely opaque to the public that funded them. Meanwhile, the employees who built SpaceX face their own version of the same problem. SpaceX has granted stock and options to thousands of engineers and technicians over 20 years. On paper, many of them are worth significant sums, but those shares cannot be freely sold. SpaceX controls when and whether secondary sales are permitted. Employees must wait for company-approved tender offers, periodic windows in which SpaceX allows existing shareholders to sell a limited portion of their stakes at a company-determined price on a schedule set entirely by Musk. People who gave decades of their careers to building something extraordinary are dependent on the decisions of one man for when and whether they can access the wealth they were promised. Most of them are still waiting. SpaceX did not create this situation by breaking any rules. It created it by following them perfectly, by finding the space between what the law requires and what transparency demands, and by staying there, patiently, for more than 2 decades. The Falcon 9 has now landed more than 200 times. Starship has reached orbit. The Mars program is underway. And SpaceX is still private. The launch that never lands is not a failure. It is a choice. They didn't need your money to build it. That's exactly why you'll never own a piece of it.